India has a coastline of approximately 7,500 kilometers, ranking it among the top 15 countries globally in terms of coastline length. 95% of India's trade by volume, 70% by value conducted through all the maritime routes, highlighting the importance of its ports and shipping industry. However, India has limited number of publicly listed companies, hardly a handful. So, though we have increasing strategic importance in maritime defense, the shipbuilding industry remains underrepresented on Indian stock exchange. So today we are going to see one major company called Mazagon Shipbuilders, which is kind of a duopoly or even monopoly in some areas in India in terms of defense. Hello everyone, welcome back to Nandu's Equity. Mazagon Shipbuilders, or simply MDL or Mazdock, the company that has built INS Impal and which is having a huge order book and one of the top 3 companies in terms of shipbuilding business apart from Cochin Shipyard and Garden Reach Shipbuilders. So today we will have a detailed analysis from fundamental, technical and stock split and dividend perspective, and also conclude on whether is it a good buy for long term. Before we jump into more details about Mazagon Shipbuilders, I definitely need to talk about INS Impal, which is designed to bolster India's naval power in the Indian Ocean region. As a guided missile destroyer, it is capable of a wide range of operations, including anti-air, anti-surface and anti-submarine warfare, making it a versatile and potent asset in the defense. INS Impal is equipped with an array of modern weapons, including BrahMos, which is kind of a supersonic cruise missiles for anti-ship and land attack roles, and also Barak 8 surface-to-air missiles for air defense and torpedo and anti-submarine warfare capabilities, enhancing its defense against underwater threats. And of course it has AK-630 and Octoberada 76mm guns for surface and air engagement. The beauty of this is completely built in India by indigenous parts. That is what is making it more significant from a Mazagon Shipbuilders company. So that is the company we are going to deep dive today. Mazagon Shipbuilders is a government-owned shipyard that builds naval vessels and submarines for the Indian Navy. Some of its major clients include Indian Navy, Coast Guard, Container Corporation. Mazdock is the script name, which is known for long-standing commitment to creating responsible warships and submarines that can help defend the nation. Mazdock, with roots dating back to 1774, has cultivated a robust legacy in naval manufacturing, evolving from humble beginnings into a key player in India's maritime defense sector. Mazdock has amassed an impressive track record, having constructed a total of 800 plus vessels since 1960. This extensive portfolio includes a diverse range of vessels spanning from warships and submarines to cargo and passenger ships, showcasing Mazdock's versatility and expertise across various maritime domains. MDL's primary focus on manufacturing for the defense sector underscores its strategic importance in bolstering India's naval capabilities. With notable projects such as the construction of warships and submarines, MDL plays a crucial role in safeguarding national security interests and strengthening country's maritime defense infrastructure. For the last financial year, India allocated approximately 53,000 crores, which is closer to 6.4 billion to the Indian Navy, which represents significant portion of the overall defense budget. The Navy's shares of the total defense budget was around 16%, which reflects its growing importance in India's security strategy. Indigenous shipbuilding and submarine programs, including the INS Vikrant aircraft carrier, modernization of naval assets such as destroyers, frigates, submarines and naval aircraft, all these having a very strong focus for Navy funding. Investments in coastal security with an emphasis on maritime surveillance, coastal radar networks and port security, all this have strategic importance in the current scenario. The substantial order book of approximately 38,390 crore as of third quarter financial year 24 highlights the strong demand for Mazdock services, and also it is kind of a confirmation for revenue growth. India is expected to increase its fleet size, aiming for a 200 plus ship navy by 2030 with a focus on aircraft carriers, nuclear submarines and other high-tech naval platforms. China spends about 230 billion for its defense budget on its navy in particular, with a fleet of 350 vessels, and US is having much larger budget and also spends about 200 billion allocated annually to maintain its global fleet and bases. So compared to this, what India is currently spending seems quite less, but considering the current situation and all global geopolitical situation, there is a strong possibility for continuous increase in this space. While ship construction remains the primary revenue driver, MDL's involvement in ship repair adds diversity to its income sources. This balanced revenue mix reduces reliance on any single segment and enhances resilience against market fluctuations, contributing to long-term stability and sustainability. MDL enjoys strategic location that facilitates seamless collaboration and operational efficiency as it is situated in Mumbai. The geographical advantage enhances MDL's ability to serve its clients effectively and reinforces its position as a key player in the maritime defense ecosystem. MDL has consideration of developing greenfield shipyard at Navi Mumbai, which underscores its commitment to growth and capacity enhancement. Through strategic partnerships with institutions like IIT Madras, MDL has embraced technological advancements to improve its manufacturing processes. The development of AI-enabled inspection products underscores MDL's commitment to innovation, quality assurance, and operational excellence, positioning it as a leader in adopting cutting-edge technologies. Mazdock's dedicated department for indigenization underscores its alignment with Make in India initiative aimed at promoting domestic manufacturing and self-reliance. By procuring 75% content locally, MDL not only supports national priorities and also enhances cost efficiency and strengthens the country's defense industrial base. Beyond its core shipbuilding activities, MDL is actively pursuing diversification into new segments such as underwater equipment, marine engineering, and heavy machinery. This strategic diversification initiative not only expands MDL's market reach and also indicates mitigation of risk associated with over reliance on single industry segment. The stock price has been going down since the PSU crash, and from its all-time high of 5860, it is now available at 4000 level. There is still more chance of further going down due to the recent crash. After November election from USA, things might change, but however, this particular stock with strong fundamentals is a good item to keep it in your watch list and accumulate for a long term. And also now it is available cheaper than the industry P after a long time. From a technical point of view, it has been struggling between the 200 to 300 moving average and also kind of forming a triangle pattern from its 5000 plus 5800 plus level to now 4000 level, and volume has decreased in the recent time unlike the June-July time frame. So definitely there could be a chance when it breaks out with volume, this will be a good add. So Mazagon Dock Shipbuilders board has approved a stock split in the ratio of 1:2 at their meeting held on 22nd October. The current face value of each stock of the state-run defense company is 10. So after this stock split, it will become 5. And this is the first time ever they are doing this stock split. So the board of directors also declared an interim dividend of 23.19 per equity share, and it is going to be fixed as 30th October as record date for the purpose of payment, and it will be paid by November 20th. To conclude, this stock is definitely available cheaper from my perspective, and good to add to our watch list because this might further go down considering the current market condition for the next couple of weeks. and as it completes its dividend and stock split, this might even be available more cheaper. So from overall perspective, it has very strong fundamentals, very strong order book, unlimited opportunities with its monopoly status, doing a lot of R&D and technological advancement, and unshakable presence, because this is the only one making so many different ships and submarines for Indian Army, Indian Navy. And only thing currently I see the technicals are little weaker. So as we want to invest for a long term, we can do SIP mode rather buying in lump sum, because whenever it further falls, we can continue to add. So we have great opportunity. Maybe I want all of you to check this consistently, adding to your watch list.